Good afternoon and welcome to BizTech's Asian Midday Market Watch. It's the 17th of July, and as always, we have our Monday guest, Vishnu Varathan, Head of Economics and Strategy from Mizuho Bank, coming out to us from Singapore. Now, Vishnu, as always, great to have you on the show.
It's always my pleasure to be here, Brian. Thanks for having me on today. Good way to start the week, I have to say.
Now, Vishnu, before we get your insights, we're going to take a look and see how the numbers across the region stack up. We start, however, with cryptocurrencies. Bitcoin is at 30,294. It's up 0.43%. Ethereum is at 1,931. It's up 0.32%. Looking across the regional stock markets, Japan today is closed for Marine Day. So we start with the SGX, which is down 0.26%. Bursa Malaysia is down 0.58%. Shanghai is down 1.17%. The ASX All Ordinaries is down 0.02%. The Hang Seng is down 1.04%. Rounding up the red numbers is the Kospi, which is also down 0.44%. Not exciting numbers, all negative territory. Tell us why, Vishnu.
Well, it appears Japan is on Marine Day and we are all underwater. So that stacks up. Apart from that, I think there are two factors here. One is, I think markets are reassessing just how much optimism they want to push on the back of the whole narrative behind the Fed peak and followed by pivot. I mean, we did have a spectrum of data pointing to inflation in the US decelerating faster than expected, the CPI, then the PPI. And bear in mind, this came on the back of non-farm payrolls that were also softer than expected. So, of course, all the bulls waiting to go risk-on mode jumped onto the bandwagon and say, this is it. The Fed is done. One more token hike in July and no more. But end of the week, you had consumer sentiments coming out, the U of Michigan survey, jumped to the highest since September 21. Coincidentally, that's when the Fed started suggesting normalization. So that's one. The details in it, inflation expectations were actually bumped up, not lower. So this is a bit of a step back and markets wondering, should we really be celebrating the CPI so prematurely and so exhaustively? And I think that has been followed on by China GDP numbers today. The headline came in softer than expected. Of course, the headline looks good. It's 6.3%, but it's lower than the 7% expected. And one way or the other, even 7% is not exciting given that the base effects are tremendous. Last year, this time, China's economy barely grew 0.4% year on year, unheard of. So that's why the numbers look so good, whereas the underlying data tell us continued deceleration. And even there, the only silver lining was industrial production accelerated slightly rather than decelerating. So from 3+% went up to 4.5% rather than decelerating to 2+. But here's the rub. Looking at the exports numbers that slumped dramatically, the question here is this a durable turn in industrial production, or is it simply inventory building with the drag factors still in place? So there's really no good news out of China for the time being. Whoever is hanging on to a half full glass is looking at it in terms of how stimulus might excite us. And until we get the details on it, given that so far whatever announced has underwhelmed, I think markets are on a cautious footing. So we have got the frame, or at least the backdrop of huge risk on last week. This week is a bit of digesting, a morning after effect, if you must. And I think markets could remain cautious ahead of more Fed signaling and or China headlines that come out.
And also the underlying numbers with other trading nations have not been good. If you look at Singapore avoided a technical recession, but last week with the GDP numbers that came out. But today we've got basically very poor export numbers out of Singapore.
And you hit the nail on the head. Skirting a technical recession is really cold comfort, given that the manufacturing sector is already in a deep recession. So really the question that's left is something we asked earlier, which is the services sector outperformance and divergence. Should we celebrate it as something of a buffer, or should we be wary of it because this is an artifact of a delayed reopening from COVID, giving services a boost, whereas the underlying momentum may not be as strong. So I think those are the kind of soul searching that markets have to do. In particular, bulls that have run a little too far at least need to have a pit stop for the time being.
Now, Vishnu, at the start of the week, what should we be looking out this week as investors that could move markets?
Well, there appears to be a dearth of tier one data. So after we've exhausted quite a bit of data, I think markets are going to be looking at the other side of the Atlantic from the US to look at how inflation numbers come out, how other activity are stacking up. In the US itself, we don't have any major data. We've got RBA minutes, and then we've also got. I think for the most of it, markets are going to be left digesting China data. And let's bear in mind that I think one number that doesn't always appear in the headline but continues to weigh on markets is an exceptionally high youth unemployment in China at over 20%. So I think these are perhaps things that they're back on the mind, and there's really no headline this week that's going to move the needle in a big way. We watch out for headline risks, and I think one particular one is, Treasury Secretary Yellen suggesting that they want to be more constructive in the US-China relations. So that may be a silver lining if we see something more concrete on that. But otherwise, I think this week is one of consolidation and, if nothing else, caution.
Now, Vishnu, on that note, thank you very much for your insights. Thanks for coming on the show.
My pleasure. Thanks for having me, Brian.
I'm Brian Fernandez, and we've been on BizTech's Asian Midday Market Watch. This interview will be on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.